So hello guys, welcome to another episode of Finfluenced where we talk about how we got finfluenced by the Finfluencers. So if you are in Bangalore, you know the struggles of the Bangalore traffic. There are times when you leave home early for office to explore a new shortcut that you have discovered. Turns out that the shortcut that you think you have recently discovered, everybody else has discovered at the same time, and now while the main road is empty, the shortcut is jammed, and suddenly you find yourself googling how to drive like an auto rickshaw wala. These are the quirks of living in Bangalore, but you know what? This is exactly also how the stock market treats you. There are times when you are just flying through MG Road and you're reaching a destination within 20 minutes. But there are times when you are stuck for 2 hours. But you know what? If you account for all the days that you have been stuck in traffic and not, it all averages out to maybe around 45 minutes or so. And this is exactly how big institutional investors think and invest in stock markets as well as one of their more prominent strategies of making a lot of money, by looking at a healthy mix of fundamentals and technicals. And we'll discuss exactly the strategy being used by these big institutional investors and even hedge funds. A lot of hedge funds have made a lot of money by using this strategy, and this strategy is nothing but the mean reversion strategy. So let's have a look here. So this is a nifty chart, right? You've probably looked at this chart like hundreds of times if you follow Finfluenced or any kind of influencer. If you can visualize a trend that goes maybe something like this, you may think that there is a mathematical way of deriving this trend as well, and there can be certain inflection points where you can figure out whether the market is undervalued or overvalued in the technical sense. And then combining the fundamental analysis and the sentimental analysis around the market, maybe you can understand good entry points and exit points. And this is exactly what the mean reversion strategy is. The mean reversion strategy says that over time, the stock price will always tend to its mean value. And that can be in a relative interval. I think this indicator that I found out through one of the Finfluencers on YouTube as well is, I think, a 200-day mean. And if we see this on the Nifty chart, then we can see how perfectly the price action follows the mean reversion. I'll tell you exactly what this is. So mean is basically average. Uske baad you have your standard deviation. And you can just Google what standard deviation is, but if you're a student of mathematics, statistics, or any kind of STEM field, you would know what standard deviation is. So these green lines are the first standard deviation, and these small red lines are the second standard deviation. So usually, whenever the stock goes below the first standard deviation, those are basically the entry points in the market. Those are the safe entry points in the market. And whenever it tends closer to the higher side of the standard deviations, those are zones of overvaluation. Even in the last fall of the market that we have been facing since the month of September, October, it exactly hit the second standard deviation, maybe twice, and then trended down straight towards the lower side of the second standard deviation, which is just beautiful to see. और अभी निफ्टी is exactly at its mean. ये तो इंडेक्स पे है. Index is a fairly good example because it averages out the volatility of individual stocks. But you can look at individual stocks. Let's say we look at Infosys. Whenever it crosses the overvaluation, it consolidates and then trends back to the lower standard deviation. And similarly, in the history as well, it has always tended towards its mean. Okay. Now combine this with fundamental analysis and sentimental analysis, and maybe tweak the parameters based on the intervals that you want to look at. You will realize that this is a fairly reliable indicator. Okay? I think some famous person has said this: all indicators are wrong, but some of them are useful. This is another one of the more useful indicators out there, जहाँ पे you can see that this is just another data point that helps you analyze the market, and the more the data points, the better your analysis is. It's one of those things, right? You either leave early from your house, get stuck in traffic for 2 hours, and then reach your destination, or you stay at your home, till the traffic clears out and reach your destination in 1 hour or half an hour. Maybe at times you can beat the market, but you know what? By staying at house for 1 more hour, you have saved yourself from the trouble of getting stuck in traffic for that 1 hour. So it is a relatively peaceful way of tackling the challenge at hand. And this is exactly what the mean reversion strategy says. And you can look at countless examples from small cap to mid cap. Let's take one of my favorite stocks, Indian Hotels. It always trends upwards. So इसका ये है कि whenever it goes below its mean, it may go at max towards its first standard deviation. Varna, basically a stock that has a momentum upwards, if it goes below mean, just enter it. ठीक है? A stock जैसे Tata Power, which has been consolidating since, या फिर let's look at Apar Industries, which has taken a beating. It has taken a massive beating because of poor results, right? Was a beautiful upward trending momentum stock, has fallen down towards in fact below its second standard deviation. So यहाँ पे if you had entered when it broke its mean, you would have incurred a massive loss. This portrays that looking at a single indicator does not help you at all. In fact, what you really need to do is look at all the data points, all the reliable data points at your hand. Look at your fundamentals, look at quarterly results, look at financials, look at the sentiment around, look at indicators like these and other indicators that you may or may not think are helpful. मेरे opinion में, this is a fairly useful and fairly reliable indicator. कि when I have to take heavy positions in the market, I will look at the mean reversion strategy, I will look at the MRC indicator, and I will take that significantly into account while placing my orders. And as I said, upward trending stocks जैसे Bajaj Holdings again has been giving us 25% CAGR, जैसे मैंने last video में discuss किया था. Whenever it falls to the first standard deviation, are very good places to take entries. मान लो you have been investing in Reliance Industries since the last 20 years. ठीक है? And you have had a lot of profits in that time. So when do you exit? Do you exit at all? Let's say you have decided to exit and move on to a different kind of an asset class or different kind of an asset itself, right? So you can look whenever Reliance Industries has been upwards of its 2 standard deviations from the mean, has been a good time to exit, because uske baad you will see either a long consolidation or a sharp fall. Now, depending upon where you are in the market, you will take that judgment in your hand. But regardless of that fact, this particular indicator is a very, very reliable source, in my opinion, for large caps and small caps. Let's look at Kaplan Point, right? Kaplan Point mein, I took an entry at a bad level, which was close to its 2 standard deviation, and this is why I was struggling. मेरा कुछ थोड़ा बहुत partial stop loss hit हुआ था यहाँ पे, so I haven't taken that much of a hit. I am still holding this position, but इस time पे I did not know too much about the mean reversion strategy, so that was another mistake. And it is thankfully to the knowledge out there by the Finfluencers who guided me towards this particular strategy and to this indicator as well. And now it makes more sense कि यहाँ पे अगर देखो यार, यहाँ पे अगर इतना स्टॉक चला गया होता, there is no way you can imagine कि this is going to fall down. ठीक है? Because you are seeing an upward momentum. Yes, everything is overvalued at this point in time. But what is the probability of things falling down? It is higher for sure, but in an emerging market, you always feel that things are always going to go up. Magar just when you take into account the mean reversion strategy and you see that even technically it is so overvalued, then you know that this is not the time to take positions in this particular stock. Other good stocks that I've discussed about, PGEL, also facing the same thing. Upward momentum mein hai, a lot of influencers I know have been discussing about it, but they were discussing about it during this overvaluation. I took positions, luckily, I did not know about the mean reversion at that time, but luckily I took positions when it was closer to its mean. That is why I am in profit in PGAL, and while the Finfluencers that I follow are not. But that's only on the short term, right? I mean, this is a very good stock. In the next 12 to 14 months, it's going to go, it should go very, very well because of the upcoming earnings and all of that stuff. Okay? So I think I've emphasized enough on this strategy. Portfolio review में अभी मैं कोई update नहीं दे रहा हूँ. You know why? Because next week, from April 1st week of the next financial year, I am going to start a new experiment. I am going to try to beat a mutual fund or try to beat an index or both. So stay tuned for that. If you haven't subscribed, please subscribe, like this video, and I will see you in the next video where we will start a new journey together. Till then, bye. छोड़ो जाने